FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's February 5th, 2018. Well, last Friday saw the market go way down, the Dow Jones Industrial Average, at least a significant 666 points. And I think I saw like red on the chart, but it wasn't red ink. It was, the sign of the devil, I guess. I don't know. Bitcoin collapsing before our very eyes, down to under $7,300 per Bitcoin, and no end in sight. Talk about a falling knife. Well, what's going to happen next? I don't know, but be part of the show. Feel free to email us, kl@kerrylutz.com. And John Rubino's with us. John, happy Monday.
Hey, Kerry. Yeah, well, happy Monday for short sellers. I think the rest of the investment world has their dictionaries out and they're looking up volatility to see what that word means, because it's been such a long time since they've heard it.
Is that a 4-letter word? It sounds too long to be a 4-letter word.
But you're right. Pretty much everything now is starting to get exciting because interest rates are spiking, which is a really big macro deal. That changes the terms of so many different investment relationships. And the stock market is tanking. The Dow's down more than 1,000 points in the last 5 trading sessions. Of course, it was up 5,000 points in the previous couple of months. But still, this is a very scary thing for people who had forgotten that stocks can go down. And then, as you mentioned, Bitcoin, Jesus,
when did that happen?
That's something where people thought it was just something that went up. A lot of people came into that market with no experience with markets, and they just assumed it was going to go up forever. And now it's, what is it down? 60% from its peak or more? Because it peaked around $20,000.
Yeah, so it's more than that. 65.
Yeah, so it's 7,200 right now. That's a big drop. That's a .com bust caliber decline in price.
But, John, the thing is that with Bitcoin, it's so compressed, the time cycle, that, whereas like in markets, stock market, these things could go on for years. In Bitcoin, they seem to go on for like 48 hours, or 3 days, and then the trend is reversed. What's going to be with this?
Well, who knows? Because there's so many moving parts and so many imponderables with no historical precedent in the crypto market that there's no way to know exactly or even generally what's going to happen from one week to the next, just because this is a new market. It'll work itself out, and eventually it'll be understandable and predictable when we get a little bit of trading history and a little bit more sense of which cryptocurrency operates in which way relative to the others and relative to external markets, and how governments are going to respond to cryptocurrencies. Because, a big part of Bitcoin's crash recently, part of it was just for technical reasons. It went up so fast so far that it had to retrace some of that. But also you see the outside world adapting to Bitcoin and reacting to it and regulating it. South Korea did some extremely stringent regulatory things to Bitcoin just lately. And China, of course, was always trying to regulate it. And now the credit card companies are coming out and saying, no, you can't use your Visa card to buy Bitcoin. Right. Sorry, that this is, we don't know whether we're going to get paid if you do that because these exchanges are being hacked and failing. And then there was a gigantic hack, $500 million were stolen from a major Bitcoin exchange just lately.
Yeah, in Japan.
So put all that together, and it's and futures contracts on Bitcoin started trading very recently, which means the lambs were led to the slaughter there. All these Bitcoin evangelists who were buying every dip and assuming Bitcoin was going to go to $1 million per coin in one beautiful arc ran up against sharks who know how to trade futures. and know how to sucker beginners in and fleece them. And that's part of what happened here too. You had the real players in the market just taking these beginners who didn't really understand markets to the cleaners. So add all that up, and of course you're going to get a hard fall in this new thing that everybody's trying to figure out.
There were 4 major stories about Bitcoin related. Number 1, banks ban buying Bitcoin with your credit card. That got picked up tens of thousands of times around the globe. Number 2, New York Times article appeared last week. Worries grow that the price of Bitcoin is being propped up. Who would have thought it? And that deals with this Tether virtual currency, that whenever a lot of money goes into Tether, the price of Bitcoin gets run up, and it uses this other exchange called Bitfinex, and the CFT subpoenaed the company, and there's trouble ahead. Number 3 here was the Zero Hedge article about the crypto conference facing backlash after holding networking event at Miami Strip Club. Now, it just so happens I was at the Miami, the North American Bitcoin conference, and I was at this event, and I had no idea the place was a strip club until I walked out, and the guy said, yeah, this is a strip club. I mean, I didn't see them. Yeah, they had some go-go dancers who were, I wouldn't say scantily, provocatively dressed on the floor and these platforms and stuff. But I said, if this is a strip club, they're going to go broke because I didn't see anyone stripping,
Hey, Kerry, that just sounds like a regular Friday night at your house.
Yeah, exactly. I mean, what the heck's going on? And then a paper was released by a couple of academics, Price Manipulation in the Bitcoin Ecosystem. This got released back in January early, but word of it's kind of just getting out. And they said that a single actor likely drove the US dollar Bitcoin exchange rate from 150 to 1,000 in 2 months. We're looking back several years to the Mt. Gox debacle. It said trading volume on all exchanges increased greatly on days with suspicious activity. And their conclusion, unregulated crypto or kleptocurrency markets remain vulnerable to manipulation today. Look, if I was a trader and I actually knew what I was doing, the first thing I would do is dump stocks. I'd go to cryptos. If I had $100 million, I can make that market in the short term go in whatever direction I want without even outwardly going out to manipulate it. All I got to do is try to sell 1,000 Bitcoins into this market at one time, John, or even 100, and that thing is going to tank. And then I just go and snap up more Bitcoins. And then once my trade has been digested, I'm making profits here. And especially if I can use futures for it, forget about it. It's so simple to manipulate because they're so shallow, they're opaque. Even though you can see the blockchain, it doesn't tell you anything that you really need to know. You can really send these markets going whatever direction you want.
Yeah. Well, and now the futures are trading in Bitcoins. We need to start tracking the commitment of traders report because it's possible that's a useful signal for trading Bitcoin because you've got, I'm sure in that market, those same two groups that are in the gold market that we watch, the speculators on the one hand,
right,
and the people who are, the analogs of commercials. And they would be basically the professional traders, right, I guess, in the Bitcoin market. And then the speculators would be the newbies, the people who are just coming in and making small bets because this is a new way to bet on this thing that's always going to go up, and that would tell us when that comes back into balance, that would tell us Bitcoin is bottoming and that the pros have decided to start ramping it up again. So there might be a trade there. We should watch that.
Yeah, well, you know what? The commitment of traders in this instance, if it gets published, I think would probably be the traders being committed to sanitariums because they lost their money and all their money in 15 minutes and went bust, right?
I love the stories that have been coming out now about on chat boards and things about the Bitcoin people who have lost everything. And, oh my God, I mortgaged my house and bought Bitcoin, but I didn't tell my wife. And now I have to tell my wife. All of these stories are happening. And it's not funny, except that it is kind of funny, because
it's pathetic, but it's funny.
Yeah. And old people, the guys who have been around a few cycles have seen this so many times because it happened with gold in 1980 and silver at the same time, and junk bonds and tech stocks and houses. It's happened over and over again. And Bitcoin, as you said, is just the same dynamic compressed compressed into just a year or two.
I wrote an article about it. Basically, it was entitled "It's the Dopamine Stupid," and you just get so high on a bubble. When you're making money doing nothing and through no fault of your own. And then you keep making more and more money and it keeps going up and up. And then the next thing you know, it's going down and you can't sell because you're petrified, that your dopamine count is going to decrease dramatically. And, we've seen it so many times, John, over and over and over. And
it's astounding that it still works after the number of bubbles we've had in our lifetimes, because it's a regular 10-year thing. And so one question about Bitcoin now is this the bubble that defines this market? Is this the subprime mortgage of this decade, or is it something that exists off to the side and the real bubbles are in government bonds or tech stocks or something else? That's going to be sorted out when this thing blows up.
Well,
but we got a lot of candidates for this cycle's gigantic bubble. Yeah.
Well, I'm going to go out on the limb here and tell you that no, this is an orchestrated takedown. Probably a good thing when you get down to it. But almost certainly this is not it. And the reason why is those stories that I read to you shows that the market was getting ready to be taken down. At least in my opinion, the stories, they just had a theme to them and leaks and all that. And nope, this is not it. It's going to go back up. Almost certain of it, John, that it's going to go back up. Almost certain. Because it's just got too much more. There's too much behind it. And I think the big guys missed the run up. So what better way if you're a big guy than to knock it down and come back again, right?
Yeah. Yes. The blockchain looks like it's a technology that is here to stay. It's analogous to the internet. You don't know exactly which player within that ecosystem is going to win out in the end, but the technology itself looks like it has legs and looks like it'll revolutionize a lot of different industries. So the question is, longer term, whether Bitcoin is the vehicle for that in the currency market or some other currency, or some other cryptocurrency will be the one that wins out. But in the short run, it sure does seem like there's a point at which the guys who are now smacking Bitcoin down are going to say, all right, let's run it up now. Let's have some fun on the long side. So the question is, where's that point? Is it today, or is it $5,000 lower than today? And we won't know that until after the fact. But it would be really nice if there was some kind of a trading signal that you could use with Bitcoin, because it would be a fun thing to play. As volatile as it is, you're basically just betting on volatility in the crypto market. And that's a pretty good bet right now.
I wholly agree with you. I think that it's going to go down further, but maybe it'll go down for another day. Maybe it'll go down for 2 days. Maybe it'll go down for 2 weeks. You can't really be sure, you just don't know about it. But
and that kind of makes us just spectators right now, when it would be fun to be a participant if we could just figure out exactly how to do that.
Yeah, I think, look, an 80% retracement wouldn't be unreasonable, would it? 80% brings us down to 4,000. I'd say somewhere between 2,500 to 4,000. And I'm just basing it on a knowledge of markets. That's all. Just what we see happen. And if you look back at the Mt. Gox debacle, it went from 1,200 back down to 200. So if you just go along those lines, that $2,500 to $4,000 range looks like it will be it, because right now it's a shallow market and they're selling into it. There's nothing better. It's just like what they do in gold, right? When it's a vacation time or like last Friday, non-farm payroll, right? It's the same exact thing here. You can see the same shadowy hands at work here. Right?
Oh, yeah.
Yeah.
But what do those shadowy hands want to do next? That's the question.
Well, they want to get their cut of this pie, right? I mean, that's what it's about. They want their cut of the pie. They want to cash in, right?
Mm-hmm.
So they will do it. And of this you can be sure. I mean, we've been to this rodeo before here, John.
Yeah. Well, Kerry, someplace else where we've seen a repetition of a pattern is in central bank responses to financial crises. So another really interesting question is, at what point in the stock market do all the central banks of the world shift gears back into massive QE programs and radically negative interest rates? Do we need another 10,000 points on the Dow, or are they going to be preemptively acting soon? Another 1,000 points down, and does the Fed, for instance, shifts gears and start building their balance sheet back up again by buying bonds, and do they all start buying stocks? I think their response is going to be, amazingly aggressive when the time comes. Yeah. But we don't know what the trigger point is for these guys. So if you're short the stock market or some component of the stock market, you got to be nervously watching the central banks, because stocks are overvalued. A lot of them should fall dramatically from here based on just valuation measures. But that's not all that's happening right now. The central banks of the world could easily just decide to buy the S&P 500 with $2 trillion new dollars this week. That's what could happen at some point. And then all bets are off from the short side, because you got this big, gigantic new buyer coming in with unlimited funds. And that's got to be very scary for anybody who's making rational bets based on valuation, which has to be a short bet, right?
You have to expect
that's another interesting thing. Yeah.
You have to expect the central banks to come rushing in. Maybe they're trying to send Trump a lesson right now, saying, hey, you screw with the deep state and we'll make your stock market crater. Perhaps.
Yeah, Trump made a political mistake by taking credit for the stock market.
Yes.
So now he's attached himself to the financial markets and will necessarily be seen as somebody who's a loser if the stock market goes down, right?
Yeah.
And stock markets always go up and down. So especially at peaks of cycles like this, when valuations are at historically high levels, you don't want to bet your political future on the stock market continuing to go up. And that was a big mistake, because now he's going to have to take responsibility for what happens. And like you said, it could then be some kind of inside game within the government where one faction wants to put Trump in his place, and they use the stock market as the means to do that. And that's completely possible. There are a lot of guys out there, a lot of different parts of the government and the banking establishment that have the ability to manipulate markets. Yes. So if you've got the regulators and some of the big banks on your side, you can move the stock market up and down in the short run. And that could be part of the dynamic now too. We just don't know about that. If we knew the true history, the true actual stuff that was going on out there, it would be even more interesting than what we do know.
We just see shadows of the truth. But certainly it seems like the deep state's under attack. And wouldn't it be a great way to get back by tanking the market and sending out a message to Trump?
Well, it's certainly probably tempting from their point of view. But this is the kind of thing where, as Jim Rickards says, it's not a thermostat. It's actually a nuclear reactor that you're playing with. So you can't just dial it a little bit this way and dial it that way and know that you're in control of the machine. Because if you push it a little too far in one or the other direction, it could go critical, and then you lose control over it. So that's what they're dealing with, I think. And, good luck to them if they think they can manipulate global financial markets for their own political gain, because they probably can't.
Yeah, not more than for a couple of days, and then it gets out of hand. I think that's what happened in 2008 and 2009. It got out of hand. It went critical on them, and they weren't prepared for it. And then you had your Lehman moment, and everything else was downhill from there, and we're still recovering from it.
And it's the same guys in charge. So you would think they would have learned a lesson from that, right?
Yeah.
That this is really a tiger that they're riding. It's not just some simple little thing that they can manipulate. And it doesn't seem like they learned that lesson. It seems like the lesson that they learned was that they're invulnerable. They can do anything because the government will bail them out, and the government has the power to bail them out. So we'll see. I don't know. At some point we will discover that the government does not have the power to manipulate $350 trillion of global debt. Once it's out there, it can take on a life of its own, and it's out there. So it'll go where it's going to go.
Boy, is it ever out there, man. This is madness. This is madness at a level we've never seen. And, just the fact that we've made it this far without the big one coming. I remember like Sanford and Son, he used to say, I'm getting the big one. I'm coming to join you, whatever his wife's name was. This is the big one. And, at some point, the big one's going to come. And, well, we'll just have to see what happens. So What about gold last Friday, man? Again, like every other market's getting creamed, gold gets creamed too. Was there margin calls, or was this just a question of let's take everything down?
Well, gold had, from a technical point of view, gotten ahead of itself. There's a level of extreme resistance over the past few years, which is around $1,360 an ounce, where gold, starting in like 2013, had bounced off of that level. It got up there and then got smacked back down over and over. And we hit 1360 last week. Yeah. So that was important. If it broke through, then it might go on to the next resistance level, but it didn't break through. It hit it and got smacked back down. Same thing with the Commitment of Traders report, where the speculators had gotten wildly bullish on the most recent run up. And that's not usually sustainable either. No. Speculators, when they get too bullish, usually get smacked back down by the commercials, who are, more cold-blooded, less emotional players in the market. And so we had those two things combined to smack gold and silver back down. So in a short-term historical sense, that's not unusual, and it was kind of to be expected. Totally. But I think gold is in the early stages of a longer-term bull market now. For the last couple of years, it's been generally going up with the squiggles that we saw this past week. And that's probably going to continue based on fundamentals like the amount of debt that's out there and the relative valuation of equities and bonds. The stock market in terms of gold is a lot higher than it should be. So historically, when those two things get out of whack, you see gold go up and stocks go down until you get close to parity, and so it could easily be that we see the Dow and gold trading on a one-for-one basis in this next cycle, which means gold's going to go up a long way from there. And then we have the monetary reset that's out there, where we basically give up on fiat currencies and go back to a gold-backed currency at $10,000 an ounce or something. See, that stuff is all out there, and it's just a matter of timing. Does it happen starting now in a kind of an easy way, a little bit at a time over a decade, or do we see a kind of a Bitcoin-esque spike in precious metals to get us there really quickly? That's unknowable, but the market, or the precious metals market, clearly has the wind at its back right now. So if you can stomach squiggles like we saw in the last couple of weeks, it's a good place to be, because longer term, the price is going to go up.
Longer term, yes. It's just a question of when, and we can't know the answer to that, unfortunately, but no question, it is going to go up. It's been showing like remarkable relative strength, considering all the money going into the stock market, and gold still went up 13% last year. There was an article by Jeff Christian. People love him, people don't. I personally think he's a good guy, and he's respectable, and his research is good. And what he said was, it's not Bitcoin and cryptocurrencies that's pulling the money out of gold. It's the stock market pulling it out. And when you think about it, that makes a lot of sense, doesn't it?
Yeah, it absolutely does. When equities are soaring like this, and remember, when there's no reported inflation, you get those two things. And why would you want to be in something like gold that doesn't go up by 30 or 40% a year like Amazon stock does? There's no comparison between those two asset classes. But the minute equities stop doing that, then all of a sudden, a safe asset that preserves purchasing power like gold does looks really good by comparison. So that's what happened in the last cycle. For instance, gold and silver got whacked at the same time stocks were tanking in 2008. Everything went down. But then people decided, well, equities don't feel right anymore. They really went down, and I'm terrified of stocks from now on. But historically, gold has held its purchasing power, and let me buy some of that. So you saw gold and silver really take off from the lows in 2008 and have this really nice run up till 2011, 2012. So we could be headed for something like that, where equities disillusion a lot of investors by finally going down, and they look around for something else to do, and they find gold and silver. That could easily happen.
Great point. And at some point, no doubt it will happen. All of the market behavior that we've seen, it's gone on this way for quite a while without any blips. And then just Friday was the first blip, John,
That was quite a blip. 600 and some points on the Dow is a really unusual drop. We've seen a few of those, but only a few in the history of the market. So we'll see whether that's the start of something big or the end of the correction going forward. You can't know until after the fact whether a big move is meaningful or not, but it was certainly exciting.
Oh yeah, exciting. And it's continuing. The sell-off is continuing on today as we speak. So how long will the sell-off continue? I'm of the opinion market's still going to go up from here, but it's going to be sawtooth back and forth, back and forth. It's not going to be like last year, just straight up. But we'll have to see what happens because I'm not the expert in this. I don't pretend to be. Anyway, we're out of time, but check out John's work over at dollarcollapse.com. Check us out at financialsurvivalnetwork.com. Be part of the show. Email us kl@kerrylutz.com. John, we will catch up with you same time, same place next week.
Thanks, Gary. See ya.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.